The European Central Bank meets this week to discuss monetary policy, a meeting that comes as Eurosceptics come out on top in the Italian elections and German politics returns to a sense of balance, with the Grand Coalition re-established. Well, joining us now with some more about what we're expecting from the ECB this week is David Page, Senior Economist at AXA Investment Managers. David, welcome. First of all, what are your thoughts on what we're going to hear this week from the ECB? As I said, in the context of what we've got, in addition to politics, of course, we've got a continued worry about the fact that inflation is not picking up. What do you think we'll hear from the ECB this week?
Well, I think this week we're going to hear a pretty steady message. I don't think the ECB wants to significantly change the forward guidance it's provided at this stage. It certainly won't want to linger on any of the political developments across the course of the Eurozone. So I think what we'll talk about is the upbeat economic message. We expect the ECB to raise its both its growth and its inflation forecasts at the quarterly projections that it will publish this time around. It'll talk about a more buoyant outlook for Eurozone economic growth. We think it'll forecast growth at around 2.5%, up from about 2.3% in its December meeting. Our own view is that growth could be a little bit firmer still, up around 2.7% for the year as a whole. And then they'll talk about the fact that inflation over the medium term is likely to be moving back towards their target. But this is going to be quite a fine balance, I think, for Draghi to pull off, because the market is, of course, waiting to hear what's going to happen to the ECB's programme after we finish the QE programme in September. Is the ECB going to taper at that stage? Is it going to end abruptly? And we don't think that that's a message he wants to clarify at this meeting. So he's going to want to talk about growth being relatively upbeat, inflation moving in line, but not so much so as to need the ECB to move aggressively or anything above and beyond that. So I think it'll be a very nuanced message that comes through this time around.
As I said at the top, and I mean, you mentioned briefly about the fact they didn't really want to get involved in politics, but nonetheless, the political shape of things as they're starting to develop, as evidenced by what's happened in Italy this week, ultimately that could play into a big concern about the direction of the European Union and the Eurozone potentially. Ultimately, is that something the ECB could have any hand over?
Ultimately, probably not. Ultimately, I think you're absolutely right. I mean, there are some big decisions being made here, not least with the German coalition, which I think in perhaps coming together with some of the direction that Macron is talking about could see further integration down the line. And then, of course, the question is where Italy would stack up in that outlook. But that's something that affects, almost the very long-term outlook for the Eurozone and isn't something that's going to govern the ECB's inflation forecast horizon, and certainly is not something they're likely to play a hand in. So no, I don't think the ECB will get involved in any of that side of things.
The euro-dollar at 124, around about that sort of area. We're already feeling from hearing a number of organisations saying that the euro is a bit too high really for a lot of the exporters within the Eurozone. What is the ECB addressing in that regard? What are they doing about that?
Well, I don't think they can do too much there either. They do recognise that they need to tighten monetary policy. What you've got in the Eurozone is an economy that's growing above trend. There is still some slack, which I think is why inflation is taking a little bit more time to pick up and certainly to reach their target. But nevertheless, it will get to that stage. And therefore, you do need tighter monetary policy. At the moment, you have negative rates and still QE. And that's what the FX markets are responding to in some extent, the fact that we're going to see that come through. So the tentative movement towards a withdrawal of the monetary accommodation, ultimately some tightening policy is what's going to drive the Eurozone higher. All Draghi can do is talk to that happening at a relatively soft pace. But we do expect the euro to move higher across the course of the year. Our end-year forecast, for example, is for euro to touch 128 by the end of the year.
Okay, all right, we'll end on that. But David, thanks indeed for joining us. David Page, Senior Economist at AXA Investment Managers, with a view ahead of the European Central Bank meeting this week. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.